Thank you very much, Giselle, for that introduction. And thank you, Naveen, for the presentation. It was quite informative and quite detailed. We are going to now go through an interactive session which will cover how technology is influencing the financial services sector. With me today, I have a panel of experts who will help me unpack this conversation. And I'm going to give them each some 30 seconds to just tell us their name and their role so that you put the names to the faces. And I know Giselle has already kind of mentioned the names, but I just want you to be able to put the names to the faces. I think, Naveen, you'll be excluded from that, given that you just came off your presentation. We'll start from the far end with Bongani.
Thank you, Khone. Bongani Kra is the name, Stanbic Bank Botswana, and I'm the head of client access and looking forward to the engagement.
Thank you. Mr. Wabil.
Thank you, Okhone. My name is Otsetswe Frank Oabile. I come from the Financial Intelligence Agency as the head of information technology out there. I'm happy to be here.
Thank you, Okhone.
Ed.
Edward Wicks, I'm the Chief Commercial Officer at BTC. I'm responsible for the commercial functions of BTC. That's enterprise sales, consumer sales, contact center, mobile financial services, and service quality.
Thank you. So I just want to start this conversation with a statement that I recently came across, which I don't particularly agree with fully. And you know, the statement read as such. It said, you know, the propagation of fintechs and financial services technologies as disruption have found success across the length and breadth of sub-Saharan Africa, in spite of the socio-economic challenges that sub-Saharan Africa faces. I want to posit that, and I want to get your opinion on that. I want to posit that it hasn't found success in spite of the challenges that are socio-economic related, but it has found success because of these challenges that are socio-economic related in sub-Saharan Africa. So I just wanted to get your view on that and what you think about that statement. If I'm making sense. Ed?
Yes, you do make sense. I think what you're saying is fintechs haven't really made an impact. But I think if you broaden that to say, what do you include in there as a fintech? I mean, if you look at mobile financial services and mobile money in particular, it's had an enormous impact on developing markets and enabled a lot of people to get into the digital space, even using a basic mobile phone across Africa. So I think it has, perhaps not for smaller, nimble organizations. Not many have been able to really get in the market and make an impact. But I think over time, as the platforms become easier to integrate to and use cases become clearer, there will be more opportunities for more and more small organizations and nimble fintechs to play in this space.
Yeah. Do you have an opinion on that?
I think from where I sit, and that's a very brilliant observation, Edward, it's definitely worth mentioning that financial institutions are recognizing that financial technology or fintechs are changing the landscape. If you look at what happened out of Kenya from a Safaricom and M-Pesa perspective, that entire market is underbanked, and there was limited financial inclusion prior to the introduction of M-Pesa.
Yeah.
To your point, Edward, you find that a lot of the people don't even have bank accounts, but now we find ourselves in a position where everybody has a mobile phone. Now, how do you reach out to those people that, one, do not have bank accounts, but they need access to remittances? M-Pesa is a brilliant success story that continues to be echoed across the continent or globally. And if you look at how, as it currently stands from research, I think there are 30 million mobile account users.
Yeah.
The reality is 20 million of those are based in Kenya. So that doesn't stop a BTC, for argument's sake, from adopting a similar approach. And they are in the process of doing that because you have your Smeggers and other forms of mobile money that the competition is offering. And the market is actually starting to adopt it from a Botswana perspective. It's still not yet at the level that we want it to be.
Yeah.
And from a financial perspective, from a financial or banking perspective, we are taking notice of that, and we also want to play in that space.
Yeah.
So if you're not able to pay people with bank accounts, but you know that there's mobile money, your solutions or your channels need to be in a position to actually facilitate those type of transactions. So it's definitely a journey, and
Yeah.
we're definitely getting there, but the fintechs need to be given the recognition that they deserve.
Okay. I think maybe just to Naveen before I go to Mr. Wabile. What do you agree that the socioeconomic challenges that Africa faces have been the secret ingredient to the fast propagation of fintechs and the disruption that we've seen as a result of these fintechs in Africa?
Find its own path. Let's take an example of India, where I come from, right? So I used to be on the board of National Payment Corporation of India, which essentially piloted instant payments 24/7, 365 days a year. And if I were to take you behind the scene, the absolutely brilliant thing about that infrastructure is that it's been built on an existing infrastructure, and the cost per transaction is negligible, right? Negligible in means it's not even cents in a dollar, right? So again, I mean, if I apply the example of India, where say somebody from northern India sometimes doesn't understand the same language as somebody from southern India, and the most common language is English, where we were able to deliver, or India was able to deliver a payment system that essentially unleashed the forces for growth and velocity of money.
Okay. So now, just turning back to Mr. Wabile here, you know, it's great for us to talk about these things, and we get very excited when we talk about innovations and how we're going to take them to different markets and how we're going to amass more customers, et cetera, But from a gatekeeper's perspective, it must keep you up at night, because it means that, you know, these technologies are starting to reach more markets, more people, and thereby face more threats around money laundering, security threats, and so on and so forth. What are the things that you keep you up at night, firstly, and then secondly, what are the things that you look out for as we have these conversations and you see these things starting to bear fruit?
All right, thank you. I think first and foremost, as the government, we are very happy for any innovation of this nature. The fintech, as the colleagues have presented.
Yeah.
But obviously, there's the good. Financial inclusion is good.
Yeah.
But at the same time, there is issue that we need not forget about. The technology that you deploy, it tends to, enhance criminal activities.
Yeah.
So that's one thing that we should be watchful about. As service providers, you have the obligation to support the government. The government has brought in the legislation, and I'm sure everyone understands and knows about the Financial Intelligence Act of 2019, where we want to assist all the players, including the consumers as well, to make sure that our financial system is as clean as it's supposed to be, to make sure that there is no money laundering, to make sure that there is no terrorist financing.
Yeah.
There are certain expectations and obligations that we need to do, things like the KYC, the customer due diligence, that we expect each one of us to, ensure that as you onboard your customers, you do the needful. Thank you.
Great. So I guess a general question to all of you is, what has fintech done to improve the livelihoods? And I think we've touched a little bit on it, the livelihood of Botswana. I'll just bring it home a little bit there. And maybe feel free to take it home as well, and maybe talk about what you're doing to improve the livelihoods of Botswana as BTC through fintech.
Yeah, thanks, Sahani. So let's put the most basic scenario in place, right? You've got a job in Gaborone, you're earning a salary, and you want to send some money to a rural area, right? Basically, all you need is a SIM card and a basic phone at each end, right? And we provide the ability for cash to get into the system, right, onto the platform through our distribution agents, our runners on the ground. And once it's in the system, the person with the account can then send it to the individual in the rural area.
Right.
They only need a basic phone. The money's on accessible through a USSD string. And they merely need to go to another runner in the area and they can get the cash out. So at the simplest level, we've enabled anyone in Botswana to send money around very efficiently. So that on that level, we've provided access to a lot of people to mobile financial services, and that's replaced. You know, people used to do it by bus, didn't they? Used to send cash on the bus, and the bus driver would take a cut of it, and you know, even across border into Botswana, into Zim, that's how they did it. So we changed the game a bit, just on the most basic level.
Great.
Yeah.
Mr. Cray?
Yeah, and just to add on to that, Edward, if you look at how in terms of changing remittance from an individual in the city to somebody in the rural areas, it even goes beyond that, because it means that if even from a banking perspective, the infrastructure doesn't have to necessarily rely on ATMs or building a branch. The benefit is that you simply need the one mobile device to another mobile device to actually connect. What I will say, though, is the Botswana market is still socializing itself to fintechs and mobile devices, because every month end you still see ATMs queuing up with individuals. Even at the stores, you still see somebody going into a ATM and then walking into a retailer to purchase. Now, in terms of forward or future looking, we need to get to a point where it's outside of withdrawing the cash, simply going into the retailer and using your mobile device to actually make settlement from the goods and services. If you go onto social media, a lot of the young entrepreneurs do not need to have a bank account to facilitate a business. You will find that they will put their mobile account details, or even say, send me the mobile account credit, so that they can receive settlement. So for me, it's very encouraging to see that we've moved away from, or we're slowly moving away from having a bank account and being able to transact through mobile devices.
Okay, so and what are the just between you two gentlemen, because you're obviously coming from a bank and Ed is coming from a telco, what are the synergies that you have gotten into between these two industries, not particularly Stanbic and BTC, but what are the synergies that enable this ecosystem?
That's a brilliant question, Ohone. So if you look at the banking industry, we are seeing a lot of collaborations. We're seeing a lot of collaborations between financial institutions and mobile network operators, not just VTC. We're seeing a lot of collaborations between financial technology service providers that are actually communicating with the banks to say, we have the agility to unlock solutions for yourselves. Let us collaborate in order to unlock value for your customers. And I think that, for me, is a game changer. And we are definitely going to be seeing a lot of that, because if you look at the millennials today, they're very nimble, very agile.
Absolutely.
You know, they're actually able to foresee a situation where here's a pain point and this is how I can resolve it. As a financial institution, we're obviously, or we would love to be as agile as them, but it's ideal that you leave it to the experts to do what they're good at, and then we collaborate in terms of liquidity management and extending the other solutions. So I think the key word for me there is collaboration, and we are seeing a lot of that in the market.
100%. Yeah. So just to you, Naveen, because you obviously come from a market that is actually quite high density, and these transactions that Bongani is speaking to would be, maybe low value, high volume type transactions that go through the market with people without bank accounts. Do you want to maybe just touch on the technology platforms that you use to perform and guard against money laundering? So your AML platforms that you embed onto your mobile money spaces to ensure that we don't have funnies happening in that platform.
Absolutely. So first of all, let me just take a real example, because it will be a parallel to the situation we have in Botswana. So let's take a company like bKash in Bangladesh. A lot of you may have heard about it. It's a World Bank funded company, right? A World Bank and a number of other multilateral organizations have got together outside of private investors as well. And what bKash fundamentally does is, it could be exactly the same use case. It could be money moving from city to rural area, so domestic movement of money. And local mom and pop stores essentially act as a bank. So once the person in the rural area gets the money, he or she could walk over to the mom and pop store, withdraw in cash if they so
Right.
wanted to, or essentially use the money that is there to essentially purchase everything, right? And the same thing is also true about Bangladeshi living overseas. They're able to send through the Ripple system money into anybody, any wallet that Bcash holds, right?
Yeah.
So just to give you a sense, Bcash has got 5 times more number of wallets than the total number of bank accounts in Bangladesh, right? So the total number of bank accounts, give or take a few, is 10 million, and they have got almost 35 to 40 million wallet holders. So they essentially
That's
cover
substantial.
the length and breadth of the country, every single small. And they have made, again, the velocity of money possible. They're improving the GDP of the country, and they are digitizing Bangladesh like nobody else has done before. And again, through a private company, profitable, and which is doing exceptionally well without any, financial support from the government, right? And this is the power of technology. And to come back to exactly your point, so today we do have technology inbuilt in the solutions itself, which can do the checks on the sender, on the Benny, make sure through data checking, algorithms, we are able to say, hey, you know what? Money is going to this rural person in Bangladesh, and normally they receive 100 taka, but suddenly they have received 50,000 taka. And it flags transactions which are out of the ordinary, which can be looked on an exception basis, and everything else can be taken care of by the servers and the software that has been built in. So the technology already exists. The only thing we need is the players to come together and leverage it.
Right. Okay. Thank you for that. Mr. Wabile, just still on that topic, do you worry that there could be a potential gap in the KYC? Because if we're routing everything and tying the KYC around the mobile number, we do know that perhaps the registration of mobile number doesn't require as much as the creation of a bank account. And I'm not casting aspersions on the KYC around the mobile number, but do you worry that that in itself could present a gap and a loophole in that ecosystem?
Yes, very true. I think, as I said earlier, between ourselves as the FIA, the supervisors that supervise this gentleman, there is that program we have, the compliance program that each and every service provider has to go through.
Mm-hmm.
They are checked through the supervisors. Even us as the FIA, we can visit and work with them to see exactly the risk. It's called the risk-based. Actually, the important thing is that before the services or the products are delivered, there must be a risk-based assessment. Even when you onboard a customer, before then you need also to check the risks of that customer. The CDD basically gives that kind of opportunity to make sure that you know who that customer is. Like my colleague on the screen had said, you must know that your customer, when a transaction of 50 million comes through and he's always been transacting at $500, there's something wrong. It raises a flag. But yes, I'm very thankful also to the fact that technology is also coming up, where now we can do all these things automatically on the floor, particularly to provide and give the customer experience. I mean, you can imagine a customer having to wait for you to do all these checks, and when they want to really do a business, that would not be very good. I think to that effect, in Botswana, I think we are moving in the right direction. Thank you.
Okay. So I think that, just in terms of now taking it back to financial inclusion, I think I don't have the latest statistics, but the last I saw of it, which is, I think, about 2018, the statistics were that 20% of Botswana were financially excluded. And of course, we talk about mobile money, mobile wallets, etc. But really and truly, the bulk of it is cash in, cash out, which doesn't necessarily provide, I think we can agree that one is not really financially included until they can access services outside of the basic cash in, cash out, just transacting and buying goods. That is to say, one can actually access things like insurance, they can access things like credit, and so on and so forth. And in order to be able to do that, we obviously have to build track record and mine the data to create creditworthiness in the system. What are we doing and I'll start with you, Bongane, is there anything that you're doing to make sure that we can actually get to, or maybe narrow that percentage from 20% to something slightly below that?
Definitely. That's the short answer. If you look at how you are spot on in terms of the unbanked or excluded, it's about 20%. It boils down to awareness.
Yeah.
If the market is aware that there is a capability or mobile money functionality that enables you to transact without the hassle of opening a bank account,
Yeah.
it's an easier option. If you look at where the market is going now, you are finding that the collaboration I touched on earlier is actually becoming enhanced, because not only are you able to remit payments from a cash in, cash out perspective, but you're also able to facilitate payments in terms of an insurance premium,
Yeah.
in terms of utility. And that is actually driving a culture of transitioning from just mobile or unbanked
Yeah.
into the collaborating or communicating or engaging financial institutions, which will mean that eventually, outside of the premiums, you're creating a track record or a transactional track record, and you'll be able to get soft loans.
Yeah.
So we are definitely seeing a transition, and I'd like to believe if we do a research in 2021, maybe 2022, that number would have decreased,
Gone down a little
would have gone down a little bit. But I think ultimately it comes to, awareness. And I mean, if you look at millennials have adopted financial technology. Millennials are early adopters of technology, and people our age, yes, some of us are techno savvy, some of us aren't, but
Yeah.
financial institutions are actually getting to a point where they have awakened to reality that through fintechs,
Yeah.
we can enhance financial inclusion.
Okay. Ed, you have something to add there?
Yeah, I agree. We've got a lot to add. And I think the key is managing all the players in the ecosystem. For example, is BTC going to become an insurance company?
Yes.
No, it's
No.
not going to become. Is it going to get into the micro loans business? Probably not. It's a complicated business
Yeah.
to run with sophisticated decisioning in the back end. But with partnerships, we will definitely be offering those types of services,
Certainly.
possibly with our own brands.
Yeah.
Probably also definitely in partnership with other players in the ecosystem.
Right.
And we will, it's all about acting as an enabler, right? Making sure that technology is there for companies, big companies that are already playing in the space, and for new companies with exciting new ideas to be able to play in the space
Yeah.
and have access to our customer base and the base of all the other players in the ecosystem. So it's about putting the platforms in place and making it simple and easy for
Yeah.
these innovations to take place. But I think it's highly unlikely that organizations like BTC are going to suddenly become a bank, become an insurance company, become a loans company, set up an exchange to trade shares and things like that. That's
Yeah.
not going to happen. But are we going to play in the space? Definitely.
Definitely, okay.
Yeah.
So,
Yeah.
so actually, now that you speak of partnerships, just maybe touch on what your strategy is in terms of just partnerships, particularly with the upcoming fintechs and players in that space.
So what's happening at the moment, we're actually experiencing huge demand from existing players in the market to get access to our customer base. So I think that at the lowest level is where we're going. We're also seeing,
would
we're also
know.
talking to some, pardon?
I would know.
Yeah, you would know. Yes, we are talking to you. And we're also seeing, I mean, we're talking to organizations like yours. We're looking at opportunities in accepting payments for merchants and
Correct.
things like that,
Yeah.
and enabling small, medium enterprises to have access to that and making it cost effective and simple for them. So, yes, we are looking across the board, and
Yeah.
we've got an enormous amount of opportunities. And
Yeah.
it's actually a case for us of cherry picking the most commercially viable ones to start with, and then also putting a platform in place to make it as frictionless as possible for other players to come in
Yeah.
without us having to be too involved. So that's the real
100%,
key for it,
100%.
yeah.
Bongs, you want to
So
answer?
yes, I liked your point around frictionless,
Yeah.
and I think this is where, if you look from a regulation perspective, I did mention earlier around agility.
Yeah.
As financial institutions, we are obviously governed by the regulator in terms of what is possible, and I think it needs to be commended that the regulator is actually at a point where they are recognizing that fintech is changing the landscape. They are recognizing that financial institutions want to play in that ecosystem. And I think there's a lot of responsibility to make sure that they are also as agile in terms of making sure that, yes, let's allow the financial institutions to play in the space without compromising on the AML and terrorist financing conversation we had earlier. So it's definitely interesting times ahead.
Yeah.
100%. Niven, I'm hoping to get a more mature case study from you in terms of financial inclusion in the fintech adoption from markets that are slightly more mature in terms of these processes than we are.
Yeah, so I think one of the things that we need to, just the thing that we spoke about, we need to focus on consumer behavior, right? So if we do a deep research to say why that consumer is withdrawing cash, we just talked about it earlier, and what can we do to make sure that indeed she leaves the money in the payment system or with the bank or with the institution, the one that's hosting the wallet, right? So if we understand her mindset, what she's looking for is, can I get some kind of an instant gratification? So I know, just as an example, we give interest rates generally in most countries around the world once a month or once in 6 months. Why can't we credit the interest rate daily? Then she says, hey, you know what? I had 100 and suddenly it has become 100.1 and it's 100.2, right? And it essentially the interest rates is going up. So sometimes we really need to get inside the head of the customer and then say, hey, you know what, those small gratification, like sometimes we go to a candy store and we are buying something, but that's something just at the checkout is that small candy, which is expensive, but we don't care about the price. We pick it up and put it in our basket, right? And that's just the consumer behavior. You can lure the consumer through some kind of a behavioral economics, right? The second thing that I would say is, let's take example of Taiwan, which is a more mature economy where a lot of people did not used to take invoices from shops, right? So people will go to the shopkeeper and the shopkeeper will accept in cash, but not issue an invoice, which essentially led to loss of tax for the government because a lot of time the invoicing was not done, right? So what Taiwan started to do is to have a lottery where every week there would be a lottery in which the invoice number will get published, and that invoice number will get, say, for example, $5,000 US or $3,000 US. Very small amount of money, but suddenly there was a huge shift in the behavior. Majority of the people started taking an invoice because now they thought they are participating in the lottery, and the name of the lottery, the person who won the lottery, got published in the newspaper. So just by spending few $1,000s or few tens of $1,000s, they changed the behavior of the whole ecosystem, which no amount of policing or beating up or extorting or creating awareness campaign would have done. So I think there are a lot of unique ideas that are out there in the world that have already been successful that we can bring to Botswana, which can change the way the customer is behaving today. Because customer has a reason, but you need to use behavioral economics to change their behavior the way they have been set.
That is very interesting. Very interesting. Just before we go to the questions, and there's a couple of questions, and I'll encourage you, the viewers, to also continue sending some more questions, if you will. There's been a huge cry from the financial services sector until about recently, I guess, and I think it's still ongoing, on the commissioning of the payment switch locally. Where is that conversation? And I'm not sure if from a regulator's perspective, I know it's a Bank of Botswana predominantly conversation, but maybe just to get a comment on where that is going currently, where that is sitting.
Well, no, I don't think I would know much about that part. I think that is, as you rightly said, Bank of Botswana. And then obviously, I don't know, BTC possibly should be knowing something.
And I know our banking friends obviously are lobbying quite heavily for it. Why are you guys getting tense? Is this a very difficult conversation to have?
You do not want to, I don't know. Regulator conversations are always very tricky. But like you rightly said, there's a lot of buzz in terms of what is the value associated with it. Will we benefit or will we be compromised? So I think, once we get feedback on what that stance looks like, then you and I can be able to sit in a forum like this and have comfortable conversations.
I'm with you.
I think the complexity is there's a lot of players involved with different agendas.
Of course.
Right. And, you might get a mobile operator trying to drive it, which might not look after the interests of the banks.
100%.
So there's all these types of
considerations
taken into play.
Okay. So we'll leave that one there. Let's. I think there's a couple of questions that have come through. Hoping they can feed them through. And the first one is for Mr. Cry. Is integrating blockchain into the Stanbic Group feasible in the near future?
Wow, that's a
And
awesome
perhaps
question.
just to add to that question, you can maybe overlay it with your views on the readiness of blockchain adoption in this country. And I know the presentation was made earlier, but in your experience, and then
Yes.
we can speak to that.
So in terms, and that's a brilliant question. So in terms of blockchain, I think blockchain is definitely critical. And there are multiple blockchain opportunities outside of virtual currencies. Now, a lot of the time when people think blockchain, they automatically assume crypto. The reality is blockchain can actually be used beyond
course.
cryptocurrencies.
Yeah.
From a bank perspective, we are definitely interested in blockchain. And my colleague from Ripple made a very, very brilliant presentation earlier around how moving from a centralized to a decentralized blockchain can add value from a distributed ledger perspective. So the bank is definitely looking into the value associated with blockchain and using it as a distributed ledger.
Yeah.
And obviously the conversations are still at an infancy because right now the market is not ready to
Yeah.
adopt blockchain.
Yeah.
But I think near future would be a bit premature because you need to be able to unlock blockchain in a market that understands its value and wants to participate in the blockchain. We also need to involve the regulator because
Yeah.
you would never want to run a blockchain without the regulator having sight of the activities in that blockchain. So
Yeah.
in terms of us introducing it, I will say yes. In terms of the near future, maybe not so much. But we are continuing to monitor blockchain as it evolves.
Yeah.
And definitely, should an opportunity arise where the market is ready, we would be in a position to unlock it.
Okay, just to add on to that, and then maybe Mr. Wabile will just jump in as well. Is the limitation really only around, because from a technology perspective, I know that there really is very little limitations in terms of just transacting with blockchains and plugging into these distributed ledgers. Is it really just primarily against the regulations? In other words, what's stopping you from doing an FS transaction that can reflect in China right now? Because the distributed ledger can do it. Load it in and then load it out the other side. So is it a regulator limitation primarily?
So not necessarily. So it's twofold. One, it's market-driven or consumer-driven. I think the examples given earlier around consumer behavior. If you ask me about my honest opinion, we are not ready to adopt blockchain. We do have, for example, the clearinghouse.
Yeah.
Now, if you have a clearinghouse, you have structures in place for the clearinghouse. If you adopt a blockchain, you're eliminating the need for a clearinghouse.
Yeah.
So those dynamics need to be taken into place. There are people who work at clearing houses. There are
Yeah.
people who are hired to monitor the liquidity in the market from a clearinghouse perspective. The introduction of blockchain will obviously, to the example you gave earlier, result in disruption.
Yeah.
Now, are we ready for that disruption, or can we unlock it in such a way that the disruption adds value
Right.
more than
That it
impact
takes
on
away.
people's
Yeah.
employment?
Yeah.
So it's definitely not at regulatory level alone. There are a number of other critical factors that need to be taken into account.
Yeah, and I'm quite certain you will say yes.
Absolutely, yes.
It will make you worried.
No, it's very true. From
Yeah.
a regulatory point of view, I think there's no problem. Like I said earlier, when these service providers are ready
Yeah.
for something that is going to disrupt the financial system of this country, we come together, sit
Yeah.
at a table, and then we iron out the risks. Because key to it, like I said, is the risk. Blockchain being a decentralized solution, one wonders exactly who's going to control what.
Yeah.
It's like everything is just
Yeah.
So basically, what we would like to note, then how do you manage these inherent risks in the technologies?
you're worried if you don't have control over it.
We are worried
basically.
you don't have control.
Yeah.
Definitely, because that means everything's going to...
Understandably.
Exactly.
Understandably.
And if you look at how blockchain is used in a market like Ghana, they have an app called, I think it's Bitland, where every registration of land is actually on a blockchain. And for that reason, it's very difficult to tamper or interfere with
land
those registrations.
Yeah.
And this is something that even locally we can adopt. I think you're well aware that land or land allocation is a challenge, and if you have a blockchain that allows for the allocation and monitoring of who has been allocated land, it's something that our government and the land board can actually embrace in terms of having records of this successful allocation, and knowing that because multiple players have acknowledged that this piece of land belongs to Ohwane, there's very little that they can do from a tampering perspective.
I'm with
So there's definitely value in blockchain, not just within the financial institution, but countrywide.
Yeah. Okay, we're just now going to jump on to, I think there's a couple more questions. And this one is to you, Mr. Gupta. KYC is required by regulation in banking. How is that going to be implemented as the world gets ready for blockchain?
So firstly, it is already happening today. So for example, in the blockchain solution, which our banks or regulated institutions use here all over the world, the RippleNet, which we call it. Say, let's take an example of a bank here in UAE, which is RAK Bank, right? And let's take another institution there in India, let's say IndusInd Bank, right? So all the customers are the customers of the bank. So they go through full KYC, all 100% of the transactions are AML compliant as per the current regulations in both central banks in both countries. And what blockchain essentially does, it makes the transactions instant, which make the transactions error-free with pre-validation, and then lowers the cost for the banks versus what it was earlier. So you are able to use the same technology, but apply the new framework. So the easiest example will be when internet came, it doesn't mean that everything in internet is anonymous, everything in internet is illegal. But what it did was when, say, for example, Ed is sending emails to Naveen earlier, instead of sending a fax, now that information moves through his server to my server, and it's authentic people essentially conversing with each other over email. And exactly the same thing we are doing for money. So I think in some way, blockchain being sort of away from regulation is not correct. You could imbibe, and in fact, you could fast track the use of regulation or imbibe the regulation within the blockchain itself so that both parties are secure when the transaction happens. And it's not a 0 or 1 world. You're basically able to have both regulation and the benefits of blockchain together, like what you do with RippleNet, which with tons of our customers experience it.
Okay, so I guess it's a question of maturity and us getting to that place where we can actually, from a regulatory perspective, once we have the data and the information of how it operates, overlay KYC on top of it and regulate it.
Yes.
We're going to now move on to the next question, which is for you, Mr. Weeks. How has Smega empowered the hawkers community in the past years? I think you touched a little bit on this, but please go ahead.
Yeah, it's a very good question. So we've enabled them to make some money out of handling mainly the cash in and cash out component of our mobile money offering. So they also get backing from the dealer network as well. So there's a certain amount of funding that's required for each of the little runners on the ground, the hawkers. And we've made sure that all that infrastructure is in place and that we can handle the funding from the bigger guys onto our platform, and then it can be easily distributed out to the runners on the ground. So that's how we've done it. And we've got 50, 60,000 of these people registered on our network, and we leverage them and enable them to make some money out of each transaction.
Awesome.
Yeah.
Great. Is there any more questions? Do banks see blockchain as a disruptive technology and a threat to their mainstream services or an enabler to their service delivery? What are the banks doing to leverage opportunities that blockchain brings? We have one man from the bank here.
So, we actually touched on this earlier, and I just wanted to reiterate that it's definitely a disruptive technology and not a threat. As previously stated, because we are currently governed by regulation, it's critical that we have conversations with the regulator and highlight the value associated with adopting blockchain before we can actually roll it out as a means of operation.
Right.
So it's definitely not, it's a disruptive technology that adds value. But we're not yet at a point where we can wake up tomorrow and decide that all financial institutions have leeway to adopt blockchain. Yeah.
Okay. Thank you for that. We're running out of time, so I'm just going to take 2 more questions before we close out. Who owns the number that I use to transact in my mobile device? Okay. Is it the telecom service provider or myself? If it's myself, then why is it the number given to the other user, even if it still holds money inside both data and airtime? Why is the number given to the other user, even if it still holds money inside both data and airtime?
Well,
Do you understand that?
Yeah, I do understand what they're saying. So
Okay.
if you have deposited some money into a Smega account and it's
Right.
been
And it's
inactive
linked
for
to
a year,
your SIM card and your number.
yeah, it shouldn't be able to happen, because what we do is we've got a system in place that tracks the Smega account and the mobile account.
Yeah.
And if there's no activity on the Smega account for a year, we're required by regulation actually to take that money out of the account and deposit it at a holding account.
Yeah.
Right. So there shouldn't be a scenario where a SIM card is taken out of circulation and then there's a mobile money account attached to it where there's money.
And the new holder
and the
finds
new holder
balance in it.
finds-
Yeah.
And also the mobile money account is PIN protected. So I don't know how somebody would actually be able to access that money without that PIN code, unless
Okay.
it's a very simple one and they've managed to get in there.
And of
So-
course, there'll be a process for me to redeem the money that sits in the
Yeah,
suspense.
we're obliged to
Okay,
hold that
to give it
money,
back.
and yeah, if somebody came forward and asked
Yeah.
for it, we would. But we make every effort to get hold of those customers and say, look, there's some pooler still in the account.
Yeah.
Please take it out because you haven't had any activity there. But
Yeah.
So we do everything we can to try and return it to
Okay.
the rightful owner. Yeah.
Well, I think with those few conversation pointers, we come to the end of. Okay, I'll just take one more question, actually, if you'll allow me. Are there any considerations by FIA to allow open banking soon as a way to improve customer experience in Botswana, Mr. Wabile?
Please help me unpack the open banking, Mr. Kra.
Mr. Krai?
What is open banking?
Like it says, open banking. So it's without the hassle of KYC.
KYC,
It's
the
similar
limitation,
to
the regulations, et
Yes,
cetera,
without
et cetera, yeah.
it's without the regulation.
Yeah.
Well, until we sit down and see the benefits, until we sit down and see if ever there are no risks pertaining to AML, CFT, I don't think the world is like as a country, we are obliged to make sure that we manage risks to do with AML and CFT. So, unfortunately, I'm not privy to the how it works in detail. So maybe my answers would not be as eloquent as the customer wanted.
Yeah.
Unfortunately, thank you. So
I think in short, what I'm hearing from what you're saying is, to the viewer, hold on to that thought for now. So we won't be opening.
yeah, but not necessarily, don't indulge.
Yeah.
I think indulging is imperative. I think Bank of Botswana is there to assist in unpacking it. And then the FIA then will look into the laws,
Yes.
our Financial Intelligence Act, and review it.
Okay.
As we're currently reviewing it anyway for purposes of the blockchain and stuff like that.
Okay. So I think that brings us to the end of the segment. Thank you, gentlemen, for joining me in this conversation and giving your insightful contributions. Thank you, Mr. Gupta, for joining in through the video link. Have a good day. And thank you to the viewers for joining us in this conversation and for your contributions and questions. Thank you very much.